again, everybody. Welcome back to the Everyday Growth Advisors live stream. You guys know what day it is. It's New Ticker Monday today. And we are about to have a loaded schedule today. So I hope you guys are ready. I'm going to get right to it today because we have a lot of things to discuss. I was doing a lot of analysis for you guys over the weekend. And I have some really nice tidbits for you guys. I also will stick up to my promise of explaining a little bit today about how a weakening dollar, or why a weakening dollar, what effects would it have on the economy, what effects it would have on stocks, the reason why gold is rallying, and a bunch of other stuff. So today's live stream is supposed to be really, educational, kind of give you my insights, see if it helps you out, understand, navigate these markets as usual. You know what I do. So I hope you guys enjoy it. Make sure you smash the like button. That's the only thing that I ask for when you come through this stream. So without further ado, let's get on with the regular programming. You guys know how we do it. We start off with the news analysis, which is we look through the news and then we look at pre-market movers. We do a SPY. Now we do a SPY, Dow Jones, and a NASDAQ technical update. And then I get into any other stuff that we have. So today we'll be discussing new ticker, which will be Goldman Sachs. We will also be going through, some other possible avenues. So with the world situation not improving, headlines are focused on gold prices, which I have been I have been saying this for months. I think maybe 1 or 2 months. I have been mentioning that gold and silver will outperform the market this year, and the reason was just purely because we have a dilemma at the Federal Reserve where inflation would eventually catch up. We don't know what the effects would be, but we know how gold would respond in respect to the weakening of the US dollar, since they are both pegged, right? When one goes up, the other goes down. When one goes down, the other goes up. So, but more on gold later. I'm going to explain exactly how or why this happens, and then also the effects of a weakening dollar on the economy in general, okay? So, welcome into the stream, guys. Good morning. How are you guys doing? Make sure you smash the like button, subscribe if you haven't. If this is your first time here, welcome in. We do this every Monday, Wednesday, Friday. This is a pure educational stream. No throwing you, no fish here. We teach you how to fish, and that's about it, okay? Okay, so let's see here. America's shutters, China okay. Gold rips up $2,000 as everybody's rushing towards it. At this point, obviously, institutions are getting out, right? If you're buying gold right now, I highly recommend you not to do that. I'm going to try and use really nice words to say that please don't be that person that FOMOs into a trade. The time to buy gold was a long time ago. When I was calling it on the live stream and none of you were listening to me, that was the time to buy gold and silver. Now, you missed the wave. Stay out of it, okay? There's not much upside left, okay? And even if there is, there will be a correction before before there is another wave, okay? So remember not to FOMO into things like that. Okay, and then let's see. Bloomberg's not really that interesting today. Overall, pretty bearish news. Fed outlook turns gloomier as virus continues to spread, right? This is the Wall Street Journal reporting. We have the GOP, the House, which is debating about the next stimulus bill. I think they said they wanted to try and do another $1,200 stimulus package, which may or may not do much to markets. I think it'll have a stimulative effect to the market to the upside. That's what I feel, at least. And then we have, let's see, jumbo mortgages are no longer cheap as mortgages. Coronavirus is back with the vengeance in places where it had all but vanished. Yeah, this was okay. Amazon CEO Jeff Bezos faces rare test in first testimony before Congress. Interesting. Okay. All right. So, and let's just take a quick look at the markets here with the Wall Street Journal. See if they have anything. U.S. stock futures start week with muted gains. Yeah, we're seeing that definitely. Investors set aside worries, driving a melt up in markets. Okay. Overall, except for this one headline, seems to me like the news is bearish. And what does that mean, stream? When the news is bearish, what does that mean, right? You gotta definitely remember that we look at the news here as an indicator to how retail traders will be viewing the news, right? And we don't follow retail. We don't follow retail style. We follow regular style, and we do what professional traders do, and that's what I'm teaching you, right? I teach you to juke the market. It's kind of like you're dancing around a tree, okay? Let's look at the pre-market here. Okay. Moderna. Let's see here. We have First Realty Indus. Okay. IDAX, National Tapestry Inc. Hasbro down today. Under Armour, Garmin. Okay. Interesting. Intel not yet recovering here. Intel with a 15% drop last week on a news article or news that it was now going to outsource manufacturing, which is something they've been doing for a long time in-house. Yeah, that was interesting for sure. Okay. Nothing notable, right? Nothing notable. I generally would like to look for, top 10 companies movements, but I don't see anything here. Okay, and so let's get into the SPY technical update here. Well, I'm going to call it the SPY DIN technical update. It's like the SPY, Dow Jones, and the NASDAQ. SPY DIN. I'm going to coin this one. SPY DIN. $. This is the SPY DIN technical update on a Monday morning. Okay, we had NASDAQ last week sell off, and those who were on the Discord, I hedged NASDAQ right there. Nice payday the next day when we opened up on a Friday. And then I closed out my hedge and took my profits. It was a nice payday. We got it right before the drop, literally right there, right before we plummeted down. And then on Friday, I closed out my hedges right there for a nice overnight 100% profit. That was a good trade. Now, what we want to watch over here with the NASDAQ is if we can hold this level. But the way that I'm looking at things, I am feeling like we will have a corrective wave. And then, so I did mention this on Friday's live stream. I said, watch for the corrective wave, right, to the 23.6. And then that will be the point to watch if we break above or we stay below, okay? This is a key level here because it's going to coincide with both the 150-200 moving averages, which are these two here, and the 23.6 fib retracement, okay? Now, if we break above this level with the volume, then we're probably going to go, back up into this upward channel. If we find trouble breaking this level, we might remain below and try to test the 38.2 again. So that's the situation with the NASDAQ, okay? And I still don't see the case for us reinvesting. Another thing is that there is a very high chance that investors are waiting for earnings to play out this week. Lots of big companies have yet to report earnings, okay? And this week we have a lot more of them. Remember, it's earnings season again. So investors are waiting to see how this economy is going to reel back from COVID-19. How badly are businesses affected? We know it's bad, but how bad? Which companies are leading? Which companies are falling off? who has the muscle and who doesn't? Okay, that's the real question here. So with the Nasdaq, we had the technical bounce on the 200 EMA on the 4-hour chart. I'm looking at the 4-hour here, and now it looks like we're going to continue to try and test this upside channel here. If we fail to break this level, we will remain to the downside. We could range for a while. Considering we already had a double top, this may just be a situation where we continue to range for a while. Okay, highly possible. Nothing's off the table. Okay, that's the story with Nasdaq there. With SPY, we are back in the upward channel once again. We've been seeing this for a while, which makes sense that, you know, SPY has a lot of catching up to do to Nasdaq and Dow, and I've been mentioning this for, I don't know, months on end. The Dow as well, with a nice bounce. You can see that as the Nasdaq sold off, SPY only retraced about 20% of the Nasdaq. Why? Because technology makes up 20% of the S&P 500 sectors, right? Within the sectors of the S&P 500, technology is 20%. So this drop constitutes about 20% of a drop, of the actual drop. And the Dow Jones was mostly unaffected, which is because it is the 30 most strongest companies within the US economy. Okay, so look for NASDAQ here to get some momentum. We may have a short-term correction and then a nice little run up. I still hold my ground, mentioning this for I don't know how many times, but saying that energy, industrials, okay, industrials, and consumer staples. These are the ones that you want to look within the stock market right now. Okay, they are the ones that are fairly undervalued, okay, and have upside potential. All right, if you're investing in tech right now, there's no way else to put it that you don't understand what risk to return is. Okay, and you don't understand how rotations work. Remember that as an investor, you're not looking at what's going to run into oblivion. You're looking at where the risk to return ratios are. All right. So if you're still looking at buying tech stocks and investing in stuff that is running to all-time highs, well and good, your choice. But all I'm saying is there are bigger fish to fry in the pond. All right. So to that, I say cheers. I hope that you find what you're looking for. Welcome into the stream, guys. Good morning. I hope you guys are having a good day. Remember to smash the like button. That's the only thing I ask for you guys to do for me. I appreciate all of you guys being here. Let's see if we can get to 100 likes today. That would be really nice. Okay, now I'm done with the technical update here. So let me get into a little explanation on the dollar, okay, and the reason why gold has been on a completely ridiculous path of destruction upward. Now, quite simply put, okay, first things first, you have to understand what has been happening for the past, months, ever since COVID has come around. What has the Federal Reserve been doing? They have been printing dollars. Okay. Now, the reason why the dollar is weakened all of a sudden is because the dollar is a cyclical asset. But you also have to realize that the dollar makes up 60% of the world's currency. Okay. 60% of the world's reserve currency is the dollar. Global currency reserves, 60% is the dollar. And it has been like that for a long time. All right, it's not something that's recent. All right, now the second most reserve currency is the euro. Okay, then you have the rest of the world currencies, which are very small in comparison. Now everybody wants to hold the dollar, and this happened not long ago. Okay, in fact, when the coronavirus had come along, everybody rushed to the dollar. Okay? Now, the reason why everybody rushes to the dollar is because it is a reserve currency. It's known to be the most stable currency in the world. Okay? Now, you have to realize that things like gold are often bought with, you guessed it right, it's bought with the dollar. That's the reason why gold prices are surging. It's not because people are rushing towards gold. It's because the dollar is weakening. Okay? So you have to look at it from a different angle altogether. It's not gold that's surging, it's a dollar that's weakening. Now, obviously, there are other factors that play into this. Okay? Now, why is gold and silver the ones that are being affected? Okay? Now, I know you must have read like articles all over the internet telling you, oh yeah, gold is a hedge and this and that and that. And yeah, everybody seems so smart to understand, oh yeah, gold, everybody's buying gold because it's a hedge, right? Wrong. Completely wrong, okay? Yes, gold is a hedge, but it's not because the gold is a hedge that people are going to buy gold, okay? It's because traders are starting to price in a little friend called inflation. Okay? Now, when the dollars are being printed from the Federal Reserve, now in today's terms, we don't actually print dollars. What we do is the Federal Reserve buys treasury bonds from banks or institutions, monetary institutions, to provide liquidity to the system. Now, they take all of those not bad debt, but they take the debt on and they put it on their balance sheet. The Treasury does that, right? Now, what this does in turn is it reduces the purchasing parity, which means that your dollars, from being able to buy something, now purchases less. Okay, what that is called is inflation. All right, when dollars are printed, your dollars get worth less. Right, simple concept. But the issue here is not that just because the Treasury is printing more money, that the dollar is going down. Okay, it's the fact that traders are dumping the US dollars in anticipation that the Fed is going to announce negative interest rates. Now, if negative interest rates get announced, what is going to happen? That means that we're going to have increased QE, which is quantitative easing. Okay? So there's a lot of factors that play into this, all right? There are a lot of factors. It's not just one thing. There's a bunch of things, okay? And there's no one real answer, all right? Now, the other thing you got to realize is that our president also wants a weak dollar, okay? So there are also inner workings of the government that would cause that. Now, ever since COVID hit, the dollar has actually been on a very big tear, okay? We have actually had a very strong dollar, okay? Welcome into the stream, guys. I hope you guys are having a good day. I just wanted to say thank you for being here. I appreciate you being here. Make sure you smash the like button. I'm hoping that we can get to 100 likes today. That would be really awesome. Okay, back to it. So now, looking at the dollar once again, okay, you have to also realize that the U.S. economy is made out of many moving cogs. Now, the effect of a weakening dollar has many profound impacts, okay? One of the impacts is, well, there are two main impacts that affect the U.S. economy. The first things first is there are good impacts and then there are bad impacts. Now, if we're talking about local businesses would be incentivized, okay, to do business within the United States of America. Now, this is part of why the president wants the dollar to be weak, okay? With a cheaper dollar, people will come to the US to bring investments. Because the dollar is cheaper, their dollars that they bring to the United States of America will be worth more, right? Simple and easy to understand, right? If you're from, for example, Denmark, and you come to the US with your currency, and the US dollar is now cheaper, well, your Denmark currency traded against the dollar is now increased in exchange rate, right? This brings local business more stimulants. Okay, and this actually stimulates the businesses within the US economy. That's the reason why Trump wants the US dollar to weaken, right? It's good for the country in terms of local businesses, investments, and stuff like that. Okay. However, and then also the other thing is exports of the U.S. economy start to rise, right? Exports rise. Why? Because now that the dollar is cheaper, foreign countries can import U.S. goods at a cheaper price, right? Something that was more expensive now is much cheaper, right? Because of the currency. Okay, so this increases exports. But one thing that it's not good for is imports, right? When you're buying something from another country, right, you want your currency to be worth more than the opposing currency, right? Because you want your dollars to buy more. You don't want your dollars to buy less, okay? So there are trade-offs that you have to make. All right? There are trade-offs, okay? So these are some effects of the dollar. Now, let's look at one thing which I was looking at earlier. Overall, what does that mean for the US economy, right? Because you have to understand, see, GDP, which is the goods, total goods and services created by a economy of a country, right? It consists of consumption, investment, government purchase, exports, and imports. It's exports minus imports, which we call net exports in economics, okay? And that gives you usually a positive or negative number. Now, in 2018, we had net exports as a negative number, which means we were importing more than we were exporting, right? Now, is that a good thing or a bad thing? I just mentioned you want more exports, right? You don't want more imports. When you're importing, if your imports are more than your exports, that's no good, no bueno. Why? Because you're paying more. If your currency is weaker, you're paying more per dollar, and the margin is not that good. Okay. So let's look at how the U.S. imports are today. You can see that we've pretty much fallen off a cliff here. Okay, in 2020. In fact, the past few months, look at this. We've gone from 20, what is this? How many millions? This is millions. So, 260 billion to 200 billion. Okay, so decrease of 60, and then the same goes for exports. Also, not doing that good. Okay, from 230 or 210 to now 140. Okay, so you can still see exports actually dropped more drastically than imports. Imports are still higher than exports, so we still have a negative net export. Okay, so a dollar would actually not be good for this situation. A weakened dollar is not good for the situation for the U.S. economy. Okay, so I'm really breaking it down so it's easy for you guys to understand here, because I understand not many people will get this stuff, but I'm trying my best to teach you guys. I just want to make sure that you guys understand what is going on. Okay, so the goal is not rallying despite what the news tells you. Okay, the goal is rallying because the dollar is weakening, and the dollar is weakening because of many factors. All right, so I promised you that, and I wanted to give you that, so I delivered it. Now, if you enjoy the content and you think that this stream brings you good value, leave a fire emoji in the chat. I really want to know your opinion, because personally, it's hard for me to do these things without your feedback, and your feedback really means a lot to me. I really appreciate each and every one of you being here. It's crazy to think how we started with just, I don't know, 5 people on the stream, and now we have 200 to 300 people watching the stream on a regular basis. So welcome in. Make sure you smash the like button. If you like the stream, smash it. If you want to see more content like this, put a fire emoji in the chat. I would appreciate it. And then, yeah, subscribe if you haven't. We do this Monday, Wednesday, Fridays. This is a pure educational stream. I only believe in, teaching you guys and giving you guys the insights. Okay, great. So we covered that real quick. I wanted to definitely explain, how that works. The mechanics of a dollar, are a very tricky thing, but you need to let me be absolutely clear and honest here that if you are a trader and you don't understand these things, it's very difficult for you to make good judging calls or good judgments, okay? Because imagine you going into this trade and purchasing gold here, right? Because it's rallying. And you keep thinking, yeah, this is going to keep going, right? Well, the dollar is not going to remain weak for a long time, okay? The dollar becoming weak is a cyclical thing. It happens from time to time, okay? And you can see it. Look at the euro versus the dollar, okay? Now, if you another good thing that I should bring up here is, if you want to see how often the dollar performs poorly against other currencies or performs worse at other currencies, what would you compare it against? You would compare it against the euro, right? Why? Because the euro is the second global currency reserve, okay? Now, if you look at the euro, it has been in a very long downtrend, right? Very long. Am I right or am I wrong? So this kind of a pullback was due. So a catalyst was needed, right? Now, at the same time, because the traders are starting to price in inflation, they're starting to price in a bunch of different things, stimulus packages, they're pricing in, all kinds of factors about the economy. Many are afraid to hold the dollar right now because it doesn't give them purchasing power, okay? And so they would rather put their money into something like gold or silver, okay? But they're not putting it into here because gold and silver can purchase things for them. They're putting it into gold and silver because this is where the risk and return favors the investment. This is where the investment generates return in the short term. Now this is where institutions probably have been accumulating positions. Okay, the first pop would have seen a lot of retail traders join, the ones that are in Discord channels and tracking things on a daily basis, majority of day traders, right? And this pop would have seen retail traders join who are just getting in now and are asking, should I buy gold? Should I buy gold? This is the question. Now, to that, my answer is only buy gold at this level, okay? By the way, this is silver. This is a chart for silver, but it looks similar, okay? Only buy gold at this level if you're prepared to ask yourself, why does God hate me? Because the moment you buy this, when something is bought up so quickly, it is bound to collapse, okay? It is bound. Now, many are going to argue and say, yeah, it can keep going, man. T doesn't know what he's talking about. Gold's going to go to 3,000 by next week. Okay. I mean, it probably will if you say it will. I'm no prophet, right? But what I do know is that the risk and the reward don't favor the upside. And so I'll stay out. You can go try and, purchase it, but I'm not. I know for a fact that this is overbought. So I'm not going to go chase a trade that's overbought, okay? And that's just my thing, all right? Okay, cool. So let's have a look at this now. Welcome into the stream, guys. Appreciate you guys being here. Make sure you smash the like button. This stream is jam-packed with information. So it's 9 o'clock now. Exactly how much time I wanted to spend on everything. I'll spend about, say, 10 to 15 minutes talking about Goldman Sachs, which is the ticker of the week. And we will also remember that Goldman Sachs belongs to the financial sector. and we're talking about the dollar weakening. And what do you have to say about that, right? You have to make a correlation there as well, okay? Remember, if, Goldman Sachs is a company that uses money to make money, and all of a sudden the US dollar is now worth less, what do you think that does to their earnings, okay? What do you think that does to their earnings, their purchasing power, their purchasing parity? The trading desk will probably make a lot of money, but the dollar would cause erosion of returns. Okay, so all right, let's get into the Goldman Sachs here. Right before I get into the technicals, I want to just go over the second quarter results from GS. This just got posted last week, I want to say. They reported earnings last week. Goldman Sachs did extremely well, actually, apart from the fact that they were holding more reserves for bad collections, bad debt, anticipating for more collapse of the economy. Banks are increasingly doing this now to basically get past the Fed's stress test, because if they don't, then they have to stop operations for a while. Okay, so let me go through this real quick. This is not me doing fundamental analysis. This is me very quickly showing you where the revenue streams come from within Goldman Sachs. And then going through like a flash summary of how the company has performed in this past quarter. Okay, so net revenues were 13 billion. That is really good. 2 quarters year to date is 22 billion. Net earnings of 2.42 billion. Diluted into per share is $6.26 and $9 respectively. Their annualized return on equity is 11%, which is pretty decent. Okay. All right. In case you're wondering what ROTE is, this is a return on tangible equity. That is all tangible related equity, which are things that can be seen and touched. Okay. All right. Net revenues so these are the highlights. Net revenues of 13 billion, 41% higher than the second quarter of 2019. It's the firm's second highest quarterly net revenues. Sounds really great. Investment banking generated a record quarterly net revenues of 2.66 billion, including record quarter net revenues in both equity and debt underwriting. Now, another thing that you have to keep in mind is Goldman just settled almost $4 billion in a lawsuit with the Malaysian government over a scandal that occurred with siphoning of a sovereign wealth fund. Okay, have that at the back of your head. That's $4 billion on the balance sheet that will disappear next quarter. Okay, when they're reporting earnings. All right. Welcome into the stream. I hope you guys are having a good day. Can we get to 100 likes today? I'm sure we can get to 100 likes. Right. I think we can. Right, chat. Come on. Let's smash the like button a little bit. I would really appreciate it. It really helps me out. You don't know how much, but it really does. Okay. I would really appreciate it. So, gracias. All right. Going back here. So, FICC, sorry, fixed income, currency, and commodities, which is a separate desk that trades all of those, generated quarterly revenues of 4.24 billion. At its highest quarterly performance in 9 years, reflecting continued strong client activity in intermediation and financing. Equities generated quarterly net revenues of almost 3 billion. Okay. Firm-wide assets under supervision, this is how much assets they manage, is about 2 trillion. Whew, that is a lot of money. Okay. Even if they made a percentage, that is a lot of money, guys. Okay, 2 trillion, that's 2,000 billion. All right, 2,000 billion. That's a lot of money, guys. The firm continued to scale digital consumer deposit platforms as consumer deposit increased by a record. Now, I personally think Goldman's positioned nicely here to take advantage of various different things. Okay. High liquid balance sheet as global core liquid assets averaged 290 billion for the second quarter. Okay. Here is the net revenue by segment. This is what we want to look at. Where does the revenues come from? So, pretty diversified if you ask me. Equities about 22%, FIIC 32%. That's a global market right there. And then investment banking at 20%, consumer and wealth management at 10%, and asset management at 16%. Okay. Okay. Then this kind of breaks down everything. Okay. Here's the provision for credit losses for this quarter. They're provisioning about 1.59 billion out of the COVID-19 expected credit loss. Okay, so that's a lot of money, by the way. All right. Provision for tax rate, their year-to-date effective tax rate is about 21%. Not that it makes differences. This is for accounting mostly. And operating expenses are 8 billion. Okay, 37% higher, but their revenues are higher than that, so still better than most of these investment banks. Okay, great. This is their financials. We will go through this on Wednesday, on Fundamental Wednesday, which we will go through the fundamentals of this business. I'll pull up this 10Q again. We'll have a look at this in more detail and break this down completely so that you understand how the business is doing. But for now, this is all I wanted to cover in terms of the fundamentals to get an idea of what and how the business is performing. Okay. Now, moving on to the technicals here. Thank you, man. Thank you, Dravidian Labs. I appreciate you, man. You're awesome. Thank you for the $10 donation. Okay. Here we go. So, technical update here with Goldman Sachs. Okay. So, we're looking at a nice uptrend that has recently broken out here. Now, it could be a breakout or it could be still within the uptrend. It looks like a breakout of the channel to me, but we'll have to see if we can pop back into this channel. I think today or tomorrow, if S&P 500 rallies, Goldman is part of the financials on S&P 500. We'll see, a repop back into here, and that would be nice to see. Then I can draw this trend line properly. Okay, right now it's still not formed a upside for me to confirm that this is part of a trend that's going like that instead, right? Okay, so we'll see how this plays out. Now, in terms of risk and reward, I do like playing this to the upside. I think it's good. It had great earnings, and the sell-off presents a unique opportunity to get in for a slight discount here. Okay, I do like playing this to the upside. I think that the upside, at least back to 220, seems probable, right? Seems probable. But obviously, I'm not buying short expiry contracts on this. Definitely not, right? Now, going back to what we were talking about, the dollar. With the dollar weak, financials might get hit this week. Okay, they might get hit because traders will be anticipating the fact that banks are going to have a muted effect with earnings, right? Especially since majority of them are working with a lot of dollars. If the dollar weakens, then that reduces their purchasing power. Okay, so the downside would be down to here, but the upside is up to here. So if you ask me, there is a this is not a good trade at all. But if I were to bet it, I would bet it to the upside after I can get confirmation of a bounce here. Okay, you're taking on this much risk. Let's say this is 1, and you're getting this much return, which is 1.2 or something like that. Okay, so I don't like the risk to reward here. If Goldman can come down here, that would present an even nicer opportunity to purchase at around 187 or 190, and then play the upside further, right? A nice bounce here with the double bottom would be a nice play. I do like the upside, but I will only take it if I get a confirmation that we're indeed going back up to test 220 levels. Okay, so watch out for that. As of right now, those are the trade ideas. I promise trade ideas, and so that's the two ways that I'll look at it. Now, with other indicators added to this, this is how the full chart would look like. You can see that the moving averages are starting to kind of flatten out here, okay? And I hate to trade candlesticks that are between moving averages. I would rather wait for them to either bounce above or go below, okay, to make a move here. Volume seems to be flowing out of the stock, right, on a 4-hour chart. You can confirm this on a 15-minute or 10-minute chart here to see what's going on. And indeed, you can see a huge outflow of volume. The stock has been losing momentum for the past few days. Even on a 5-minute chart, you can see that it's been selling off along with the broader market here. So that's a little bit of a worry. I do like the prospect of us bouncing, as I said once again, at the 190 level. This looks like a more probable entry here. And we'll see if we can get this entry by the end of the week. Now, the thing here is you have to be careful of something, okay? You have to be careful of SPY having a corrective wave to the upside, okay? And then mistaking this wave to be a bullish wave, and then it comes down again, all right? And what this is going to do is it's going to give you a false entry on Goldman. Okay, what you're going to see is that and then that, right? Because why? This is the impulsive wave. Now this becomes the corrective wave before the second impulsive wave, all right? So be careful with that. These are kinds of things that you have to watch out for, all right? Okay, I think I've adequately covered Goldman now. So that is the situation with that. We'll see how it plays out this week. If we can trade it, we'll trade it. If we can't, we won't. Remember, trading is 90% patience. As I tell my mentees all the time, 90% patience, all right? By the way, for those that don't know, on Friday, I put out an announcement that the Everyday Growth Advisors will be running an intermediate course soon, okay? We're going to take a break from the beginner's course and run an intermediate course, which will have the following. We'll be having an intro to spreads. This will all be taught by me. Intro to spreads, merit, put, and call options, vertical spreads. This was meant to be vertical, not vertical. Sorry. Defensive option strategies, which are going to be mostly protective strategies, risk management strategies, how do you buy puts, hedges, stuff like that. Protective caller puts, how do you hedge your calls or how do you hedge your puts. Covered call strategy, how do you earn additional dividends from owning stock that you already own. The wheel cycle, more in-depth, okay, not the beginner's level, but the intermediate level on how you can perform a wheel cycle, where you take, entry and then you, instead of just playing one stock, you can do a straddle on it and then collect multiple avenues of premium. And then straddles and strangles, how do you play them for earnings? How do you play them beyond? And then last but not least, on day 5, we'll do butterfly strategies and iron condor strategies. Okay, so this is going to be it's going to be a one-time, well, not a one-time offering, but I can assure you that we won't be holding this course very often, okay? Because this course takes a lot of time and a lot of effort to put together, which I have already put together now, so I feel comfortable doing it and I feel comfortable offering it to you guys. So if you're interested, stay tuned for more details. I'll announce it when the time is right, and I hope that you will partake in it. All right. Once again, welcome into the stream. I appreciate you being here. Make sure you smash the like button. Thank you for getting to 100 likes. I appreciate you guys. All right, let's get to some of these comments here. 9:15, perfect timing here. We're on track here, so let's try and get to these tickers and see as many as I can do. And I'm going to read through these comments too. Let me read the comments real quick. Sorry, I was not reading comments earlier. At work, not so great. Joey, well, that's okay, man. At least you're at work. You have a job. Be happy with that. It's a blessing, man, in these current times. Hey guys, what's up? Make this week into gold. I just spoke about gold. I couldn't sleep because of gold. Well, that's good, man. Malik, I hope you made lots of money. New artwork looks good. Thank you, Andrew. I appreciate you. I was hoping that's the case. Hope everyone is doing good. Let's get those gains. Hell yeah, let's do that. All right. Good morning. How are eBay 60 calls this week expiry? Yeah, not looking too good, buddy. Not looking too good here. It would be nice if we see a bounce on this level here. But I don't think that it hits 60 by the end of the week, though. Well, you might get lucky, but I recommend if by Wednesday, if it doesn't get to at least 58 or 59 by Wednesday, I'd say cut the position. That's my advice to you, because the theta drain on Wednesday and Friday, Wednesday through Friday will be terrible. Okay. AMD 75 call 731. Jeez. Yeah, that's. Yeah, I don't think that's happening. I'm sorry, man. This is very overbought irrationally. Part of the reason why AMD is rallied so much is because of Intel, right? Intel news caused AMD to kind of rally. I see it losing steam here and coming back down. If I were you, I would take my profits. That's what I would do. Chris. UPS 130, 731. Geez, guys. Y'all swung all of these over the weekend? You guys really like donating to Mr. Theta, huh? And then 130? No. Yeah, that's not happening. I'm sorry. I don't think so. It's really far above where you are right now, man. Unless UPS has like a its earnings are on Thursday. If you want to gamble it, try it out. We did an analysis on UPS. UPS was facing structural headwinds because of Amazon, but they do have a intact economic moat. That's the only thing that I can say about this company. Morning. How much more boom to go in gold? I answered this question already. How much more can gold go? Wow. Okay, that's 2 for 2. I guess everybody came here for answers on gold. I really went in depth there, so I'm just gonna skip all the gold questions. Microsoft 215, 731. Yeah, that's a bit far. I say cut. 1.78 subscribers? Damn, you're famous now. Byron, thank you so much, man. I mean, I'm doing my best, you know what I'm saying? This channel grew from where it was to where it is now, and I'm grateful for all of you guys being a part of it. So, once again, thank you all from the bottom of my heart. This channel is where it is because of you, and I can attest it. You know, and you were probably here when this stream barely had 5 to 10 people, and now we have 200 to 300 people on the regular, which is nice, and it feels great because I set out with the intention for this stream to be an educational stream and free forever. So it's always going to be like that. Remember, I still hold true to my word that once this stream starts having 500 people on a regular basis, I will consider doing this every day. Okay? If we have 500 people watching the stream every single day, I will consider doing it every single day. Okay? So make sure you smash the like button so more people get exposed to this stream. That's how YouTube works. If you smash the like button, then it recommends it to other people. If you don't, then it doesn't. And so then no other people find out about the stream. Okay? So you're doing me a good solid and your community a solid if you smash the like button. Microsoft 210, I just said not possible. Facebook though, let's see. You guys really need to stop with these weekly expiries. I'm telling you, it's not a good strategy. You're wasting money. 240, and the worst part is you guys swung it over the weekend. That's the crazy part to me. I don't think you guys understand how options work at all. Yeah, Facebook a little more likely, but I still say no. I still say it's probably not a good idea. Good morning. Welcome into the stream. Appreciate you guys being here. We get bullish. Yeah, exactly. That was the answer to what happens when the news is bearish. So chances are today we have like a corrective wave, but I say be careful with it. That's all I'm gonna say. Be careful with it. Walmart 145 calls for 12.18. Well, it's December. Yeah, I think you should hold that contract. I like Walmart at this point here. It looks nice. Looks decent, you know. Consolidating nicely. It might retrace back here a little bit, considering where this has been from. The retracement might be coming back down to first stop at this level here. And then the second stop this level before going back up again. So, but I do like the fact that it's consolidating here. December, you should be okay. GE $8 calls for 9.18. I mean, sure, if you want to hold it. Its earnings are coming up on Wednesday. Dangerous, but might pay off. I don't know. Probably a cheap contract, right? So you could probably hold it. Gold, 190, 828. I don't think you should buy it here. If you're in this position right now, cash it out. And then wait for a retracement. And if you're really still bullish on gold, then buy it again. That's what I would do. It can't keep pushing up forever, right? Surely you know that, right? Surely you know that. Snap 24 call. Don't be greedy. You know what I'm saying? Take some profits off the table. Set a stop loss at least. You know. 24 snap 24 call 87. Snap turned bearish all of a sudden. Big sell over here. I wonder why that happened. Big sell. And you said 8.7. I would get rid of that contract. That's what I would do. Good stuff. Thank you. Appreciate you, Dan. Beyond call 160 for September. I actually do like Beyond at this levels. Problem is it's recently turned bearish with the death cross, and it's, I don't know. I'm torn between two worlds here. I feel like it could drop. There's a big gap below it, so gotta be careful here. Your calls are probably dead, by the way. Too late to get into gold? My reply to that is if you need to ask if it's too late, it probably is too late. Knock knock. Who's there? Hi, hello, hi. Tino's best always. Thank you, Tatiana. Well, I don't know the best always, but I try to do the research for you guys so that you come prepared to the market. That's what this stream is about. It's for me helping you to get into the market. Okay. Beyond put, yeah. See that sounds like a good idea. That sounds like a good idea. Big gap below it. This one seems like a good idea. 115 though, that's a bit. Actually, you know what? It's not a bad. That's not a bad play at all. That's where the support is. That's a good one, man. I might watch for that. If Beyond goes bearish, I'm gonna do that one actually. Nice play there, Sean. Good shit, Sean. Thank you guys for the response here. Appreciate you guys. I think I need to take an economics course. Tanya, I'm doing my master's in finance right now, and I'm doing economics again. So it's like a nice refresher for me to do all these things, and then at the same time, like explain it to you guys. It's really great. So very rewarding right now. Can you go over ticker symbols? What? McDonald's 200, 731. Is that a call or a put? I don't know. I'm guessing it's a call. Looking bullish. But in terms of earnings, I'm just going to tell you that McDonald's is probably going to fall flat on its face. We just did this fundamental analysis a couple of days back. It doesn't look bullish to me at all. However, I may be wrong, and it may just go all the way to $5 million. So I don't know. Symbols. Can you go over ticker symbols? What do you mean by go over ticker symbols? You're doing an awesome job and we appreciate it. Knowledge begets profit in the long run. Absolutely, man. That is the name of the game. That's what I like to teach rather than, you know, give you guys the fish every day. Sure, I could. This stream could be about me telling you what the right trades are to take, but I think that I bring more value by teaching you about how to find those trades. Okay, and that's what the stream is always going to be about. Hey T, glad you discussed about GDP. Thoughts on the Q2 GDP forecast on Thursday? It's way lower now. Does a beat sparks a strong rally? No, it does not, Warren. Unfortunately, even if it beats, it depends by what margin it beats, and it doesn't look like it will beat. That's my opinion. What about an entry for gold put contracts? Sure, you could do that. You could do that if you want it. It's a risk, but you can. I mean, I think it's safe to take puts here, but only thing is, it's going to be super expensive. So you have to choose the right contract. Make sure the IV is not too high. Make sure that delta is decent. Make sure you're not choosing a short expiry. Yeah, those are the things you got to keep track of. Puts on Goldman Sachs. For the short term, sounds like a good idea. Hope you get your oat milk. Oops. Hope you get your oat milk. Thank you for all you do to educate us. Wonderful content and learning every time when I come up here. Thank you very much, man. That is so heartwarming. Yes, I did get my oat milk, actually. So thanks for saying that. Dude, oat milk, man. Changed my life. Absolutely changed my life. Okay. Let's see here. Microsoft 207. Yeah, you can hold that one. Square, I don't like so much, just FYI. And intrinsic valuation of Square calculated was about $125. So I'm feeling a little iffy about Square. Hi, hello. Appreciate your time and guidance. No problem, Daniel. Welcome back to the stream. Appreciate you being here. You are amazing, dude. Thank you, Dylan. Appreciate you, man. Such kind words. Thank you. Gold 177 puts. Yeah, looks like a good one. XLE. UPS calls. That's risky. Earnings this week. Be careful. When is a good time to start doing puts on gold? Now. It's a good time now. But be careful, as I said, don't be buying the wrong contracts. Okay. Thoughts on Apple? Bullish long term. You can't ask me a generic question like that because I can't give you up. Like my answer is going to be quite generic. What is the name of the volume indicator inside the chart? That is called OBV, on balance volume. You can add it if you go click on the FX here and type on, or you just do OBV, and it's the built-in indicator. It's called on balance volume. When you turn it on, it's going to be in the bottom over here. It's going to be here, and all you do is you take it and you grab it and you put it onto the chart, and it comes up there. And then on the left side here, there is a scale, and you can simply take this and change it to percent, so that it's more indicative of how many percent things move in rather than the number of shares, which can be quite confusing sometimes because you don't know in what perspective it's moving. Looking forward to the intermediate course. Absolutely, will be awesome to have you there, man. So thank you for saying that. What do you think about Amazon? Theta should help you, not hurt you. Yes, if you're an option seller, sure. Okay. Kabir, I think it might be your first time to the stream. Welcome in. Glad to have you here. There is a official call out way that we do tickers here. You got to put it in this form, but unfortunately today we've run out of time to do that. So I hope that you guys will come through for Wednesday's live stream. You guys have a great Monday. Hope you enjoyed the stream today. If you did, smash the like button once again. That's the only thing that I ask for when you come to the stream. There are big things coming to the stream. Okay, I'm not gonna. Well, actually, maybe I should tell you guys just a little bit. Just a little bit. This stream is gonna really evolve over time. All right. Once I move back to California, I have the intention of doing a live stream every day through market hours to teach you guys a lot more about trading, and trading live with you guys for maybe an hour when the market opens, to let you have an idea of how I choose trades and do trades. That's all in the pipeline coming to this stream. Okay, right now we concentrate on the pre-market, but in the future we're gonna absolutely have a live stream where I will be doing trades while the market's live, and you can come interact with the stream and kind of see how that goes. Okay, it will also be educational, so I'll be able to teach you the things that I know out of 7 years of doing this, and I hope that it will bring some value to your day. All right, so that's just a little bit of insight on what I'm thinking about. I might do like a 2K to 10K challenge, something like that. Take it slow and steady so we make like $100 a day, that kind of thing. Risk a certain amount of capital. I'll show you how to go through risk and return, etc., etc. So lots of big things coming in the future. Right now, that will be something that's coming up. All right. So I just wanted to put it out there and tell you guys. Thank you guys for coming to the stream. Have a good day. Have a good rest of your week. And I'll see you on Wednesday for another Fundamental Wednesday, where we will go through the fundamental analysis of Goldman Sachs and also do its intrinsic value calculation to figure out how much this company is actually worth per share. Okay. So see you on Wednesday. Have a good one. Peace. Love to all of you guys. Thank you for the 120 some likes. Appreciate you.